Hi traders, welcome back to another workshop. So this has been a topic that I wanted to discuss for a very long time, but I know some of you might take some time, you might really need some time to digest it because it's not something out of the norm. Alright, so let's talk about confirmation. So confirmation is one thing that we all know, especially when we're seeking for new setups, when we're looking for a momentum based setup. We want to see price perform XYZ, ticking off our checklist before we take the trade, right? But have you ever thought about how confirmation could be false, could be wrong as well? So technically speaking, what is the common retail type confirmation? Candlestick pattern. Alright, so candlestick pattern is one of the most common way to trade a setup with a confirmation, and that is candlestick. Let's say price goes to one level, you say I'm gonna go short if it shows some sort of bearish pin bar, bearish engulfing pattern, spinning top, whatever. All these, remember, all these information on the internet are made by the retail trader, which means if you follow them, you're likely to lose money. A very logical question is, do you think the bigger players are going to say, I'm gonna go short on gold for 1 billion shares if price shows a bearish pin bar? Not at all, right? So what do you think is a valid confirmation? So that is another good question as well. So let's go to the chart. I'll give you some of the very good example. So assuming right now we're trading a flag, so flag is a common trend continuation strategy that we like to trade. If you have not watched our previous flag workshop, just let me know. I'll send you the video. I actually have one in our community as well. So when we're trading a flag, if you've gone through the workshop, I've said that there are two types of entries, right? First one is aggressive entry. So what is an aggressive entry? Taking longs at the low. So what does it mean is, instead of waiting for a normal break of the flag, we are trying to anticipate a flag beforehand by recognizing the pattern itself way before it starts to form. So assuming if price does this, we already identify that is a potential flag, so I know what I'm going to do. Most of the retail traders that would not be able to identify a flag or whatever double top, whatever pattern, until the pattern has formed in. And that is the last thing you ever want to do, because if you are always being the late comers to the market, then ultimately you're going to lose money, because you are just leaning with you're just walking side by side with the 95% of losing traders. So pattern recognition is very important, and that's why I always advise all of you, if you're looking to trade a specific pattern, specific strategy, do your back testing, have enough eyes practice, so before the pattern itself even form, you know, hey, that's a potential flag. I know what I'm going to do. I'm going to prepare myself before the pattern actually starts bursting into one direction, right? So aggressive method, you enter at the low of the flag or the bottom band of the flag, anticipating a breakout. So your stop loss would be somewhere here. Conservative entry would be waiting for a break of the flag, which is a textbook style, waiting for a confirmation break of the flag, then you join the retest. So let me just again ask all of you, what is the problem here? I don't say problem. What is the pros and cons of the conservative entry and the aggressive entry? Price position. So what is price position? Is technically your entry level. Where are you entering as relative to the entire pattern itself and to the momentum? So just an easy question. Which one do you think that offers you a better entry level, a better price entry? Obviously aggressive method, right? Which is method A. So what's the other advantage that links side by side after having a better entry? Stop loss placement as well. This one, same thing. Stop loss placement is going to be wider because price could always come all the way back within the flag, then go back into one direction. And let me again ask all of you one question that will sort of just wake you up and let you rethink, reassess about the meaning, the definition of a confirmation, which is, does any of these two patterns give you 100% guarantee that the flag is going to run? No. The answer is no. So after knowing that whether if you wait for a break of the flag or you trade at the low of the flag, both provides no guarantee of whether if this flag is going to be a successful one or not, then why should you wait for confirmation when you clearly know that the option A, the aggressive method, is going to be giving you a much better risk reward, your price position, stop loss placement, high chance if you're correct, you're going to be rewarded big. And that's the topic that I'm trying to bring in here, is a lot of us, we like to wait for some sort of confirmation before we enter a setup. And that is, again, there's nothing wrong with this approach, with this mindset approach. But what does confirmation actually mean to you? For me, confirmation is some sort of comfort. It feels good. There's a lot of retail traders out there say, oh, I'll enter a setup if I have ABC confirmation. If price break through a level, blah, 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 candlestick pattern, EMA cross, whatever, then I'll take the trade. Again, if we were to remove some of the confirmation, would you actually know if the setup is going to play out? Right now, if you have a setup that gives you 10 confirmation, stochastic, RSI, volume bar, we got EMAs, break and retest, whatever pattern that you have, whatever confirmation, 10 confirmations that you have, does it still guarantee that the position is going to play out well? It doesn't. It never. Market is a probability-based business model. So no matter how you try to think, how you try to twist it around, how you seek for a lot of confirmation before taking a setup, market is still random. And the outcome of each setup is still completely random. That's why I always highlight in the community, the only way you can become a consistently profitable trader, to scale it to 7 figures, 6, 7, 8 figures, is to simplify your process and to create an easy filter. Don't try to overcomplicate your trading system, because go back to the chart. Let's give you another example. Here we got scenario A, scenario B. So A is price do this, forming a double top, rejected the previous high. Scenario A. B is price forming a potential double top, broke through the high, come all the way down. Oh no, maybe there's a bearish pin bar. Entering at the top versus entering at the low of the pin bar, which is right here. This is aggressive entry, conservative entry. Does any of this give you 100% guarantee that it will be a good one, it will succeed? No as well. That's why I always say confirmation is great, including myself, because I'm such a trader that I'm very sensitive to my entry price. Whoever has been in this community for long enough, you'll see that, you'll study that all of the setups that I take, I'm always being extremely sensitive to my entry price, because I know if I see a pattern itself, if I'm able to identify or recognize a pattern itself, no matter what confirmation that I have, or if it is a lack of confirmation, I will still take it. It's just a matter of how much do I risk, how do I allocate the risk on this specific position. So if I enter at the high of the double top, it has no difference as comparing to enter a double top after pin bar. What this is going to give you is only worsening your price position, only worsening your risk reward, hence messed up your entire setup, your entire expectancy. So let me ask you, what if you are looking to trade a double top, but this pin bar is for about 70 pips? So it means your confirmation candle is about 70 pips range. Now, let me ask you, would you enter the trade or not? High chance you will say, oh, ditch this setup, I'm not gonna take it. Yes, we have confirmation, everything's according to my plan, but what the hell is this pin bar 70 pips? How am I supposed to take the trade? Am I supposed to have an 80 pip stop loss? That's how I always say, you're trying to overcomplicate your trading system, therefore it sort of messed up or confused your decision making process. I'll give you another example. So let's say today you are waiting for a pattern. Let's say you are looking to trade this. I believe a lot of you have ever experienced this. This is what we call hesitation as well. Confirmation results in hesitation. Give you one example. Let's say right now we are looking for a setup like this. You're looking for a break and retest. Very simple. On your thesis, on your trading plan, you say, today I'm gonna trade, maybe this is gold, XAU USD. I'm gonna buy at this 1910 level. If price comes back for a retest, I will go long. Then you add one more sentence at the back with confirmation, right? So with confirmation. So again, the purpose of this workshop is not to tell all of you don't trade with confirmation, but I'm just trying to give you a good sense of what's really going on with some of these retail concepts, and does some of these things you have been absorbing been making any sense at all? Because some of them doesn't actually make sense, but because we don't spend the time to assess them, to review them, to actually think, hey, is this information that I've been receiving, that I've been learning from someone else, really helpful? All right. So price comes back to 1910, then you say, I'm gonna get in if it shows a bullish engulfing pattern or a pin bar. Price didn't. Tap this 1910, run away. Let me ask all of you, be honest, be transparent with yourself. When price starts running away from your entry, what would you usually do? There are two types of trader. First type of trader, they will say, let price, if price goes back to my entry, I will take it. Conservative trader. Aggressive trader, type B, will start thinking, oh, should I chase it? Should I chase it? Not. If I chase it now, oh, maybe it's correct. Oh, blah, blah, blah. Aggressive trader will start thinking about chasing the setup. And guess what? Normal human behavior, the further price runs away, the more you want a deep pullback to happen. So what does it mean is technically very simple. As price runs further away from your intended entry level, the more you will start having the self-talk and say, I want to see a deep pullback. I'm gonna get it. I'm gonna be correct. That's what we call ego as well. I'm not trying to tell you to chase the price, but go back to do your journal. A lot of times price test that level, it will never go back. Even if it go back, it will not go back to the exact low, because that's where we already see some sort of rejection. So technically, if this is correct, price wouldn't go back to low. It will start creating high low and starts running higher. That's what I mean by that. Human, we like some sort of confirmation. We like comfort. And that's the main reason why all of you knew that I trade with confirmation, but my type of confirmation is price pattern. My confirmation, my entry trigger and signal is pretty much the same. So if you don't know what's the difference between entry signal and entry trigger, I'll link it in the group later on. So a signal is technically what gives you the trade ideas. I'll give you one example. If you are looking to go long on gold again, what is your entry signal here? The entry signal is very simple. Price break through the previous structure. I'm looking for a retest. because this breakout through that 1910 is giving me confirmation that buys are taking over the market. That's your signal. What is a trigger? Trigger is what gives you a signal, what gives you an approval to say, hey, this setup is correct. I'm gonna take it right now, this moment. That's entry trigger. Signal is what gives you the trade idea itself. Trigger is what validates the setup itself. Alright, so I don't trade candlestick pattern. I trade purely based on pattern, purely based on price pattern. As in, if let's say price comes back here, if I start seeing that on the 1 minute or on the 5 minute we show a lot of rejection, I'll take it. Or if I start seeing that on a 1 minute we are failing to create lower low, in fact we're starting to create lower highs, we're starting to create high lows, then that would be my entry trigger. So my trigger is always based on pattern, chart pattern. It could be a wedge, it could be a long tail rejection for multiple candles on the 1 minute. I always drop down to the 1 minute because that's the only time frame that it doesn't really affect my price position, even if I were to hesitate a little bit, as compared to if you're waiting for 15-minute or 30-minute candle close. Sometimes the pin bar close really aggressive, so in that way that gives you a very poor, that puts you into a very poor position to actually think, oh, should I still take the trade? The range is about 80 pips. If I take it, the risk reward from 1 to 4 now turns to 1 to 2. So that gives you extra hesitation. That's why I always go down to the 1 minute when I'm looking for these small little confirmation candle or confirmation pattern, or it could be double bottom. So double bottom and wedge pattern are some of the very are just my favorite patterns to trade as an entry triggers. Alright, so I hope this workshop also give some of you a whole new idea, opens up a whole new knowledge into what is actually confirmation, because a lot of us we trade by some of the things that we don't even understand what's the logic behind it. Probably because when you first started trading, you learn it from somewhere else, and up until today you have still not filtered out some of the unnecessary distractions, some of the unnecessary noises that are actually slowing down your growth. So please, whatever market that you're trading, it never runs away from price pattern, from price action. So confirmation is one thing, but knowing when to be confident and to step up and say, I'm going to take this trade no matter what, because I'm confident on the pattern itself, because I'm confident on my pattern recognition. From my experience, I know this pattern is going to go up. If it goes back to the level, I'm going to enter based on price level, not anything else. Alright, that's usually how sometimes I'm able to squeeze those extremely crazy entry, because a lot of you always ask me, hey Neil, how do you squeeze in that kind of turning point entry? How could you absolutely catch the high of the candle? That's because I understand what I'm looking for, and I'm very confident about the setup that I want to take. Therefore, when the opportunity presents itself, I will embrace it. I take it. I'll take the opportunity. As opposed to when the opportunity is presented in front of you, then you start hesitating and say, is it a good opportunity? Alright, so I hope all of you learned something new here, and I hope it's an aha moment for you as well. I'll talk to you later. Bye bye.